Hi guys, and welcome to TCM Education. We're going to continue to talk about our program, which is how to transform or transfer a $20,000 position into a 4-digit trading day. And when I say a $20,000 position, it doesn't necessarily mean one position that we trade once, the whole trading day, and that's it. It's going to give us more than a grand. That's not the concept. The concept here is to trade again and again the same position, $20,000. It doesn't matter if the stock we're trading is NVIDIA. In this case, the position is only 130 shares. So let's see an example, and things will be very clear. So yesterday, NVIDIA gave down, created a bear flag above the 156 breakdown level. You can see the VWAP above. You can see how it's clinging down to this support level, and once it breaks, it delivers down a move of from 146 to 150. That's $4.50. That's roughly in NVIDIA terms, that's 4%. Sorry, 3%. That's a move down of 3%. 3% on $20,000 is $600. But you don't know that it's going to stop at 151.50. Maybe you're going to take profits earlier. Let's start with the beginning. What is the risk? Okay, so I'm entering short at 156. How much do I risk? On our program or strategy, we risk 1%, meaning $200. Meaning the stop loss should be, if we add 1% to 156, should be 157.50. Okay, but the real stop loss is 156.50. So the stop loss is not $1.50, is only 50 cents, which means I'm risking, instead of 1%, I'm risking basically 1/3 of 1%. Now in this case, can I increase my position because I'm risking $200? So what do I care if it is 100 shares or 300 shares? So in this case, we stay constant. We don't increase the position, although the stop loss is way below our threshold of 1%. So in this case, we stay with these 130 shares. Now what do you do in order to increase as much as possible the chances of delivering a great move? Of course, when you enter the trade at 156, you don't know if it's going to move down 30 cents or $5. Okay, so there are no guidelines here. In this case, it moves down $4.50. It moves up then $3 and down again. The strategy is as follows. Okay, if on the way down you can find a place where you have a normal place for a stop loss, you lower the stop loss in the money. If not, you move the stop loss to the entry and wait. So there are two decision points in this trade in NVIDIA. First of all, you can easily lower the stop loss in the money very fast because it moves down more than 1% in the first, let's see how many, 1, 2, 3, 4, 5 bars. It's already down $1.50. You can lower the stop loss to the entry and then you wait there. What's the benefit? You wait at the entry, the chances of losing on this trade is now 0. I mean, the chances were very low from the beginning to lose $50. Now the chances are not even $50, they are 0. So now you can wait and look at the chart and decide if you want to lower the stop loss in the money or not. Now again, keep in mind, it's one trade worth a position of $20,000 out of many that you can perform during the trading day. Our position is based on the assumption that you can trade up to 5 according to a $100,000 account value or account value including leverage at any point. But most of the traders don't trade 5 positions at one time. They trade anywhere between 1 and 3. So this is one of those 3, and if you are fine with it, you can stay at the entry and close the trade at 153.30 by the end of the trading day. That's roughly let's call it $3. That's 2%. So 2% on $200,000 or $20,000 is $400. That's what you will get overall if you wait in this trade more than from 10 to 4 p.m. That's 6 hours. On the way down, you can add to the position. You can take profits. I mean,
want to stop guessing and start trading like a pro? Join our one-on-one mentorship program. Learn high-impact, low-risk chart patterns, risk management, and experience with live execution. Get expert coaching and one-on-one training and support. Get your day trading goals and strategies that work. Sign up today. Sponsor limited. Email thechartsmaverick@gmail.com.
The discussion here is so vast because we can spend hours only analyzing this chart and getting everybody has a different opinion. You can go long, you can go short, you can add, watch the VWAP, where is the resistance. We're just trying to build a very, very simple, manageable, repeatable strategy. $20,000 per position. You wait until one of the following events happen. Either it's at the end of the trading day and then as a trader you close the position. If it is at the entry, so be it. If it's losing 1%, so be it. Or if it's in the money, you close it. That's the fate of the position if you wait. Another option is to manage the trade. Now there are so many ways to manage the trade that I can't describe them. One that's simple is to lower the stop loss in the money if you are short to a resistance level. In this case, there's a clear resistance level, but again, over 156.50, 153.50. Okay, so that's pretty much where actually the trade ends up being closed at the end of the trading day. So again, I'm showing you here an example where with using only 130 shares in NVIDIA, this trade gains 2%. Okay, out of the basically 10%, sorry, out of the basically 5% that we need to gain the $1,000, which is 5% of $20,000. And again, that's an example of one trade from yesterday. Now I'll move you guys to our preferred watch list, a trade that we observed already yesterday. And I'll show you that that's fine, but there are obviously bigger fish to fry than NVIDIA. And keep in mind, we are taking it to the utmost level of non-aggressiveness in terms of risk per trade. So let's look at one stock that some of you have seen already, NBIS yesterday. Now, how do you observe NVIDIA? I mean, obviously everybody's watching NVIDIA. That's not the case for NBIS. Okay, so NBIS gaps down. If you don't watch it, you're not going to observe it. If you don't have a screener for weak stocks, you're not going to observe this move. And again, you can see that how often we're using round numbers. Okay, so this is a 53 break. The risk is a full 1%. Is this trade in danger at any point? No, it isn't. But still, the risk is 1%. So on a $20,000 position, which is in this case 400 shares of NBIS, and the short trade works. And again, I'm going to show examples where the short trade won't work. And you know exactly what is the result. You lose $200. So in this case, the stock drops from 53 down to nearly 50. That's in terms of risk here or motivation here to take profits. It's immense. Okay. Now I already drew the resistance line where basically your stop loss can be and should be if the stock moves above 51.60. Again, if you don't agree, you can manage it, and there are so many ways to manage a trade. Again, the basic idea here is not to add on the position, not to scale into the position, not to basically create more risk. The idea here is to cover your risk as soon as possible, meaning after the stock drops down 1%, you cover your risk with where you move the stop loss to the entry. and then you wait. And if you wait, good things will happen. The worst case scenario is it comes back to the entry and you stop out at the entry. Being that most of US traders don't pay any commissions, and how much commission are you going to pay on 400 shares? $2 or whatever? So it's meaningless. We're not going to discuss it. Okay, so worst case scenario, you lose $2 or zero. Okay, best case scenario, you wait, the stop drops at 1 point under 50 and closes above 50. That's a $3 move. That's 6%. On a $400 position, that's $3. That's a $3 winner. You know how much is 400 times 3? That's 1,200. Okay, so basically I managed to show you just with 2 trades of $20,000 how you can reach your target. Now, is it easy to find those trades? I agree that NVIDIA is easy to figure out because all eyes are on NVIDIA, and NVIDIA is the most coveted stock. And yesterday it pulled back aggressively on I guess a sell-off in semiconductors. Okay, but let's say you're not watching NVIDIA and you're not watching NBIS. So what are you watching? Okay, you're watching stocks that are either very strong or very weak. Okay. Again, if you have any strategy, our strategy is to look at a list that's called, let me bring you to the list. Let's hope I still have time. Yeah, I still have time. The daily power list. I talked about this list so many times. And again, on this list, after 6.5 hours, there are only 16 matches found, including, and you can see, guys, out of these 16 matches, you can find this Robinhood, which is a big mover. You can find CRCL, a huge mover. You can find CLRO and BMRN, and then there's NBIS, which was the stock that we just showed. And of course, there are so many stocks here. I will show one, okay, one stock out of this list, in order for me to stick to my crazy 15-minute time frame for each video. So let's take a look at this stock, AEVA. So what happens with AEVA here? The stock gaps down, and from the first minutes, it's in the gainers losers list on every watch list across America. Okay, but what happens here? Okay, what happens here? Instead of showing a clear neat bear flag formation like NVIDIA showed, or like the 53 short in NBIS, this one is messy. It's also spready, so there is a risk of losing money. But if you stick to the strategy, you know that you are afford to lose only on a $32 stock, only 32 cents. That's it. Okay, you cannot lose more than 1%, and that 1% translates to $200. So in this case, you're going to short, if we divide $20,000 by 32, let's say it comes to 700 shares, and your risk in this case is 700 shares times 30 cents. That's the $200. Now, can you take this trade with a 30-cent stop loss? Most likely not. Okay. It's still a great short, but where do you enter? If you enter on the way down, that's fine, but it's not possible. Let's face it. So you're waiting for a bear flag formation to form. Let's say the bear flag formation forms above 31.50. It's not, you stop out. If it is above 32 and you enter the trade, you also stop out. So again, there are trades that are not working. This is one example of them, of those trades. So in this case, the stock delivers a move down of $6, and you probably, if you stick to the strategy, you're going to lose on this trade. It happens, and this is one of those examples. Okay, so there are no guarantees, but in this case, it's clear that the strategy behind it is intact. So that's basically how we're going to deal and try to show you more and more examples how to capitulate on this strategy. Thank you, and see you in the next video.